Iraq is quietly aligning for something bigger. Iraqi Dinar Deep Dive 2026. It's not an overnight event. There's no dramatic announcement, no sudden revaluation headline, no instant overnight transformation. But behind the scenes, something powerful is quietly aligning in Iraq right now. And if you're only watching the loud headlines, you may be missing the signals that actually matter. Because what we're seeing today is not one isolated development. It's the convergence of multiple economic, political, and geopolitical factors, all moving in the same direction: trade stability, rising oil revenues, political movement, and increasing global financial alignment. Individually, each headline may look routine, but together, they begin to form a much bigger picture. So in today's deep dive analysis, we're breaking down why Iraq's improving trade routes matter more than people realize, how oil prices are creating major fiscal advantages for Baghdad, what the new parliament session could signal politically, and why all of these developments may be laying groundwork for Iraq's next phase of economic positioning. Let's get into it. The bigger picture. One of the biggest mistakes investors make is focusing only on isolated headlines. They see one piece of news and immediately ask, is this the trigger? But macroeconomic transformation rarely works that way. Countries don't suddenly become stronger overnight. Instead, they improve through alignment. And right now, Iraq appears to be entering one of those alignment phases, because stability is improving across several key areas simultaneously. And that matters. Strait of Hormuz and trade stability. Let's begin with global trade routes. One of the most strategically important shipping lanes in the world is the Strait of Hormuz. Roughly 20% of global oil flows through this corridor. Whenever instability threatens this region, markets react immediately. Shipping costs rise, insurance premiums increase, and confidence falls. But recent agreements and de-escalation efforts in the region are helping restore confidence. Ship traffic is increasing, trade routes are stabilizing, and energy transport risk is easing. Why does this matter for Iraq? Because Iraq's economy is deeply tied to regional trade and oil exports. When the broader Gulf region becomes more stable, export confidence improves. Foreign investment becomes less risky. Trade partners engage more freely. Financial institutions reduce risk premiums. In simple terms, regional stability strengthens Iraq's economic foundation. Oil prices above budget baseline? Now let's talk about oil. This may be the most important economic factor in Iraq's entire story. Iraq's national budget is heavily dependent on oil revenues. Each year, Iraq builds its budget based on a projected oil price baseline. But when actual oil prices trade significantly above that baseline, the government generates surplus revenue, and that surplus creates options. Right now, elevated oil prices are giving Iraq a financial advantage. That means more money flowing into state coffers than originally projected. Why is that important? Because surplus oil revenue allows Iraq to increase foreign currency reserves, fund infrastructure and development projects, reduce fiscal pressure, cover deficits more easily, strengthen overall monetary flexibility. This is not just extra income, it is strategic breathing room, and countries in transition need breathing room. Why reserves matter? Let's go deeper. When people discuss currency strength, they often focus only on exchange rates. But serious analysts watch reserves. Why? Because reserves represent a country's ability to defend its currency, stabilize imports, maintain confidence, absorb shocks, support monetary policy adjustments. If Iraq continues building reserves while oil remains strong, it improves Iraq's financial position substantially. That doesn't guarantee any immediate dinar move, but it expands Iraq's policy flexibility for the future. And flexibility matters. Political movement, parliament session. Now let's discuss politics. A confirmed date has now been set for parliament to convene, and whenever parliament returns, speculation explodes. People immediately assume Big reforms are coming now. But here's the reality. A parliament session does not automatically mean major announcements. It does not guarantee currency reform. It does not confirm immediate policy changes. What it does mean is this: political processes are moving forward. And that matters because political stagnation creates uncertainty. Markets hate uncertainty. Investors hate uncertainty. Institutions hate uncertainty. So the fact that Parliament is reconvening helps signal governance continuity, legislative movement, potential budget, financial discussions, progress in broader reform frameworks. Again, it's not the final step, but it is part of the process. Global financial positioning. Another factor many overlook is Iraq's growing integration into the global financial system. Iraq has spent years working to modernize banking compliance, anti-money laundering systems, SWIFT payment infrastructure, cross-border transaction controls, international reporting standards. These aren't flashy developments, but they matter deeply because modern economies require modern financial infrastructure. No country can fully integrate globally with outdated systems. Every banking reform Iraq completes improves credibility, reduces transaction friction, encourages foreign participation, builds long-term confidence. This is the type of groundwork serious investors monitor. Why these signals matter together. Now here's the key point. None of these signals alone changes everything, but together, they create an alignment. An alignment is when momentum begins building beneath the surface. Trade stability, oil revenue strength, political movement, financial modernization, reserve growth, regional de-escalation. These are not random headlines. They are connected variables. And when multiple macro indicators begin improving simultaneously, it often signals that a country is entering a stronger strategic position. What this does not mean, now let's stay realistic. This does not mean a revaluation is guaranteed tomorrow. Iraq is about to shock markets overnight. Investors should expect immediate dramatic change. What it means is the foundation appears to be improving. And foundations matter more than hype, because no major economic transition happens sustainably without groundwork first. So here's the bottom line. Something meaningful is quietly aligning in Iraq. Not loudly, not suddenly, but steadily. Trade routes are stabilizing. Oil revenues are strengthening. Political machinery is moving. Financial systems are modernizing. And together, these developments suggest Iraq may be positioning itself for a stronger long-term economic future. Whether that eventually impacts the Iraqi dinar in a meaningful way will depend on how consistently Iraq can maintain and build upon this progress. But one thing is clear: the story is evolving, and serious investors should be watching the process, not just waiting for headlines. If you want real macro analyses on the Iraqi dinar and global currency developments, subscribe to Global Currency World for more deep dive updates. Like the video if you found this analysis valuable, and comment below. Do you believe Iraq is entering a major transition phase, or is it still too early to tell? I'll see you in the next one.